Hi, Larry Gaines, Power Cycle Trading. In this video I wanted to go through some of the key global market relationships. On Friday we had the ECB. They did nothing with their rates. They left it pretty much unchanged, but Draghi did hint that he was concerned about the strength of the euro and that he would do whatever it took. So basically the last couple of days you've seen the euro really come off hard. Now the key here too is also with the euro, you can see the impact on the US dollar. So this is a dollar index. So we were really breaking down and moving to the lows. Cycle indicators were down and negative. Now they've popped back up. So this is a key asset class to follow, the dollar. Now the dollar has a lot of bearing and a number of things that it impacts. So let's go through the various asset classes and how the dollar can impact the various major commodities around the world. So one thing you need to understand is that the most of the major global commodities, they're priced in dollars, US dollars. So as the dollar goes up, it creates those commodities to become more expensive. So one of the main ones that it can impact is crude oil. So here's the crude oil time frame. Here's the chart. This is a 1 hour time frame. So you can see how that push to the upside on the dollar had an immediate impact to push crude oil down. So crude was looking at making a nice gain, and then all of a sudden the dollar hits and goes to the upside. We saw that euro got hit hard to the downside, and then look how crude came off going into the rest of the day on Friday. So it went from a high of 101 all the way down to 99.97. Now this kind of move, this is over $1,000 a contract, from 101.20 down to 99.78. That's about $1,300 per contract. So that's a big move. So that's one thing that the dollar did as far as its effect on a global asset such as. Now you can also see that the dollar going up, that impacted the yen. So you can see the yen was making a move higher, and then it pushed down the yen futures. So this is another correlation tied to the US dollar. Now here's the 30-year Treasury bond. As the dollar pushed higher, that also pushed money back out of the bonds, and you can see the bonds sold off as well. So another impact based on a dollar move to the upside. It created rotation out of bonds to the downside. Now here's gold. So gold has been really choppy, but you can see that it did have an impact and pushed gold down early, and then it came back up later in the day. So these are major correlations. Now one thing I also wanted to bring up is that crude oil is something that really is affected by the dollar, and I'm going to have another Want to Learn to Trade Crude Oil webinar on Monday night. Let me show you the details on that real quick. Now we were at room capacity right at a little bit before 8 o'clock. I had this webinar this last Thursday, so had such positive feedback and so much excitement over that I'm going to have this same webinar. I'm going to do it again live on this coming Monday, May the 12th at 8 p.m. Eastern. And we're going to cover, this is what was covered in the webinar. We'll go back through this, the major oil benchmarks and their importance, my favorite trading vehicles for trading oil and energy, global oil flows and how how that impacts and the markets in general, and the importance of global oil flows, the importance of market contango and backwardation, the dynamics of these two type of structures and how they affect price and how you trade that, and then how to identify oil cycles and ride them to the right direction, steps for finding those highest probability trades, and a lot of great insider oil trading stories from me and my over 25 years of trading experience and the oil patch. So I hope you'll join me. You can register on this email.